Okay, so these are our course outline. This is what we'll be looking at in
All
the
this
coming
now.
week. Yes, we'll talk about what is forex. We'll talk about what moves the market because if you are trading forex, you need to know those elements that causes the price to either move up or move down, right? So we'll talk about characteristics of a successful trader, fundamentals, most important forex terminologies, risk management. Because every business has some amount of risks, so we'll tell you how to manage risk. And first, correlations, market anatomy, support and resistance, which is otherwise called demand and supply. We talk about trends. We talk about opening a broker's account. That's opening a demo account. That's practice account where you can use to, you know, try out the strategy we are going to be teaching. So we have valid orders because most people feel that when you place a trade, that's all. For an order to be valid according
Mm.
to what we teach, it needs to have a stop loss and a take profit. So you need to calculate your risks before you even enter the trade. You need to know. You have to have clarity of what you are going to
To go
get,
into.
yes, and what you are going to take out of that, or what you are going to lose. So we have other types and placing them. There are various orders. Then we talk about opening trading views account and analysis. Then we talk about trend lines. So now let's talk about what is forex. Let's talk about what is forex. So forex is that type of financial market that deals with the exchange of currency from one form to another. What that simply means is that in the forex market, all we do is that we exchange currency from either GBP to USD and USD to GBP and all of that, and then we tend to make profit from that price volatility,
Mm.
which is price movement. Price is always volatile. When they say the market is liquid, it means that the market has it has money in it that moves the market. You understand? So the market is volatile due to money that is being traded. So let me just move to the next point. Like it's a $5.4 trillion a day market. What that means is that what keeps the market going on a daily basis, unlike the stocks market and the rest, is that every day about $5.4 trillion is what saturates the market.
Every
It's
day.
yes every day. So we have big investors in forex, people like Warren Buffett, big hedge funds, and big banks. So the stock market, I think their daily liquidity, their daily saturation, it's about I think 1 billion or thereabout dollars. But this is $5.4 trillion, which that's what makes it the largest financial market in the world. So the forex market is the largest financial market in the world. So profit is made, as I have said earlier, from price volatility, which is price movement, changing the price of a given financial asset at a given period of time.
Time.
So, like an example I love to always use was the situation that happened in 2015 when we had the Nigerian naira, which was previously valued at 140 naira to $1. But within a short period of about 6 months or thereabout, we can see price moved from 104 to from $1, which was initially 140 naira,
Mm.
to about 500 naira, which now became $1. Understand? So that change, what we are supposed to do in the first market is to speculate these changes, because these changes they all have indicators. Before anything happens, there are always signs that this thing wants to happen. So as a forex trader now, we look into those indicators to make the decision to either buy and sell, because there is only two decisions we can do. Because forex is a business, so we are either buying or we are either selling. And whenever we buy in the forex market, we are trying to speculate that we are speculating an upward movement. Whenever we sell in the forex market, this is very very important. We are
Or
speculating
down
a
movement.
downward movement.
Yes.
Yes. So we see if I say buy, I'm saying up. If I say sell, I'm saying down. You understand? So let me just do an example for to that. Let's say we are looking at this chart. This chart, for example. Okay, my internet. What am I expected to do? You see that the market overall it went down, right?
It's going
From
down.
here
Yeah,
it's going down. So what we are supposed to be doing here is to sell because the market is going
yeah.
down.
Down.
But this short time that the market went up, we are supposed to buy. Which this short time the market went up, we are supposed to buy. So the question is, how do we know that this up will be sustained like this, up to
Okay,
this
I
extent?
understand.
You understand? So how we can know is by following a strategy. You understand? We are supposed to follow a strategy which we are going to teach at the course of these lectures. So that's what it is. So now, what moves the market? You know, many people believe that what moves the forex market is solely the fundamentals. When they say fundamentals, we are talking about news events, those economic indicators, those things that happen in an economy.
Okay.
Understand? So people believe that that's what solely moves the market, but I think I'm the only trader in the whole world that believes that that's not what solely moves the market. Why do I say so? I believe that it is rather the fundamentals and trader sentiment. Okay, look at how I put it. I say that what moves the market is trader sentiments to the fundamental and other factors. Because if you say what moves the market is solely that's trader sentiment to the fundamental, you are wrong because there are sometimes the fundamental may come out positive, but the market moves negative.
Okay.
So in those scenarios, what do you think happened? It's just the decision of the house. It's just the decision of the market movers. That is the overall decision, it's the overall sentiment that at the end of the day would play out. You understand? So it is wrong to say that the fundamentals move the market because what are the elements of the fundamental if not the traders and their sentiment? Because no matter what the fundamental is, it's still left in the hands of the traders to decide where the market will go by their demand and supply. You understand? So that's just what it is. So characteristics of a successful trader. A successful trader is very disciplined. Very, very disciplined. There's one thing that I know of in forex that if you must be successful in forex, you must be very disciplined. You must stick to plan.
It's the one. Everything life.
Yes, very yeah. So you must stick to a trading plan. Like you see my computer, I have this paper here. It reminds me of my strategy. I've mastered the strategy, oh, but I continually keep this paper. I gum it to my system just to so that I don't make mistake. Because you have to follow it the way it is. Because as I told you earlier, it's something that if you have a strategy that works, your duty as a trader is to effectively execute that strategy. Understand? Is to effectively execute that strategy. You should not work with sentiment. That's when I talk about unemotional. You should not say this thing must go down and it does not meet your criteria. Why are you selling? Because whenever the market wants to go down, we are supposed to be selling. Whenever it wants to go up, we are supposed to buy, right? Now, it doesn't meet your criteria for a sell. Why do you sell? Because you know you are emotional now. You are now saying this thing look like you don't want to sell. You are now gambling. So a trader has to trade unemotionally. No matter what. There are times that you might have losing streak. That's what it's called losing streak. When you have 1, 2, 3, 4, 5 losses in a row. But if you have a strategy that has statistical edge, at the end of the day, there is high probability on your favor that you are going to come out successful. There are other elements that I will discuss maybe as we move further, such as risk reward ratio and all of that. All right. So knowledge is knowledgeable. Have a mentor.
Yes.
Yeah. So most people feel that they can just wake up one day because they heard that forex is paying people and they just start trading. That's the fastest way to lose money. Going into something
Don't know about
that you don't know about. You understand? So apart from that, the example I like citing when I talk about knowledge is just that you want to become. Let's say you want to become a medical doctor. The first day you went into the university to study medicine, that first day there's no how they can allow you to start doing operation on people because that's a delicate tax. That's a tax that is left for professionals. All right. So many people they just jump into the forex market and want to start trading real money. That's how you lose money. So you have to work out something that works. That's what it is.
Like I have,
Okay, so it has to be result oriented. Trading is a performance art, just like any kind of like football. Trading is seen as like when I had some psychological issues some time ago, I was recommended to one athlete coach. The person who works on psychology, was a psychologist,
wow,
was
what's
for
the
athletes.
other issue?
No, it's just
You lost money.
no, I not lose money. I think not necessarily. I don't know what happened, but I was having emotion. I was having fear. The strategy was working, but I was afraid to execute it. So when it now happened, I say, "Oh, I for take this trade though." I don't know if you understand, but the thing has already happened. But why was I scared to now place that trade? You understand? Maybe I don't have confidence in my strategy then. So I was recommended to an athletic. That's someone that is that kind of work on athlete psychology.
Professional.
Yes, a professional. So that tells us that forex trading is a performance act. You continually learn in the game. You continually get used to the system. You develop yourself and confidence and everything. So objectives in forex is to make the best trade. Many people think that our objective is to make money. But I tell people, if you are making the best trade, there's no way you are not going to make money. And what does it mean to make the best trade? It's a trade that follows your trading plan. It's a trade that follows your entry criteria. It's a trade that follows your confirmation checklist. Understand? So that's the best trade according to your strategy. So there is still possible that you may be taking a trade that is 100% according to your strategy, and then after following that your trading plan you come out unsuccessful. Then you should know that it's not your fault, rather there's problem with that strategy. So you should go back and back test it and see how you can better that strategy. So if you have back tested something and you see that it has over time, it has statistically came out profitable with an edge, what you should do is that, and if you start implementing and you see that it's not coming out with the result as expected, that means you are getting something wrong. If you are effectively executing it, maybe the things, if you are supposed to buy after 1 or 2 3 touches, I don't understand, you keep buying, and then if it doesn't come out successful at the end of the day, you should look back into your drawing board and see how you can work on what it is. Because once you have all of this and you have a good strategy, there's no way you can be unsuccessful. So now it has good risk reward ratio. When we talk about risk reward ratio, we are talking about how much are you risking per trade and how much are you willing to get out of a particular trade. Forex is the only business that you can determine with high precision exactly how much you are risking, exactly how much you are going to get out of a particular trade if it goes your direction. And there's this thing I like to do to build confidence in all of my students, is that I tell them that even though you close your eyes today and you are placing trades, there is no how that you can place 100 trades and lose the whole 100 trades. It's not possible. Because this is more like a 50-50 something. I don't know if you understand. There's no, even though you close your eyes and place 100 trades, you will come out with at least roughly 50% correct, 50% wrong. So now, if you have a good risk reward ratio, which is our deepest secret, you are risking 1%. Let's say you have 10 opportunities now. And then you are risking, each time you lose, you are losing 1. Each time you win, +2, right? That means you are risking 1. That's the risk reward ratio is called 1:2, right? You are risking 1 for 2. Understand? So let's say you had 10 opportunities, remember, and you lose 6 times, which is even more. You are losing more than you are even supposed to win. Yes, but due to the fact that you cannot lose 4, let's say that 4, the remaining 4 you won, and you determine that each of those 4 you get +2, +2, +2, +2. So imagine you lose 6 and now you are getting +2, +2, +2, +2, which will now make it 3 into 4 places. That's altogether 3 into 4 places, which gives you 12. So have you not covered for that 6 that you have lost, and even came out with 20% return on investment? Why? Because you had a very good risk reward ratio. So another thing that kills many people in the forex market is greed. They want to make money. They just came into the forex market with 36,000, that's $100, and wants to make $1 million. You understand? It's those kind of things are not possible. That's the fastest way to lose money. So if you want to,
it can also be.
it can be done. It can be done, but that is now gambling. That's now luck. When atoms of luck. Yes, and there's how you can be very strong and you are professional. That the odds will be in your favor. That means if you try it out, you have a 60% chance of it working out for you, rather than somebody that does not have all of this.
It's not even good to take it after all.
Yes, it's not good. It's not good because it's risky. Yes, small. So that and it's also very important so that you will last in this business. Like myself, I've been doing it for a long time. If without good risk management, if I was greedy a long time ago, we would have had issues. You understand? So it's not good to be greedy. It's rather you should take it slow and steady. So characteristics of an unsuccessful trader. Whenever someone is unsuccessful in a particular field, it is due to some basic characteristics, and one of them now in forex.
Opposite of this one.
Yes, it's the opposite of the other one. So not discipline, doesn't stick to a trading plan. Just like we have a business plan now, you have set out exactly what you want to do to get to an end goal.
It's opposite now.
Yes, the opposite. So it's very emotional, not knowledgeable. It's a gambler, and objective is to win all his trades. That means he doesn't want to see losses. Whenever he sees streaks of losses, it affects his emotion, which will now cause problem at the end of the day. He doesn't have good reward ratio. I saw a guy.
Oh, it's not disturbing me.
Okay.
Hello, babe.